My name's Ron Heeks, and I'm the Managing Director of Larvotto Resources. We acquired the Hillgrove Gold-Antimony project about 7 months ago. It's a high-grade gold and very good grade antimony. Both of those are trading at record prices at the moment. We have just released our pre-feasibility document on the project. We intend to have it in production by early 2026. And we have just starting our definitive feasibility study and project financing early next year.
Ron, good to meet you. We've not met or spoken before, so I appreciate you coming on and talking to us. Right, pre-fees is out. Do you want to give us those headline numbers?
Yeah, the headline numbers, and these are our initial numbers. We've still got a lot more to go. We've got a 1.5 million ounce resource at 6 grams per tonne gold equivalent. It's a gold antimony project, so we tend to talk in gold equivalents. The initial reserve is over 600,000 tonnes at 6 grams per tonne gold equivalent. That gives us a 7-year mine life, producing about 80,000 ounces gold equivalent per annum.
Right, so 7 months ago, you're kind of moving through the phases quite quickly, and looking at your market cap, you look to be sort of trading like a junior explorer. There's a slight disconnect. What's going on there?
Yeah, look, there's a huge disconnect there, and people are only just starting to appreciate that. And since we've acquired the project, our share price has doubled, which is nice to see. The project was in administration. The company that had it previously was advancing towards production, and we've ended up with their senior staff, which has been a wonderful pickup. But they were heading towards production and funded through an underground operation that they had in Queensland. That had a massive underground collapse. They ran into severe cash flow issues, and the company went into administration, and Hillgrove got caught up in that turmoil. So their troubles, unfortunately, weren't due to Hillgrove at all. They had a 3-year plan to put the project into production. It had been in production. It had run successfully as an antimony-only operation for 30 years, up until 2005, when the antimony price got very low, sub 5,000 US per tonne, and it was put on care and maintenance. And our predecessors were working that project through. The project's had $150 million spent on it. It has a fully operational operating plant. And it has 15 kilometres of underground development, decline in place, mains power already in place. So very, very advanced, and that's why we've been able to move through so quickly. It already had a multi-million ounce resource on it, so we've been very lucky that a lot of the initial work has been done for us. We've also been very lucky that since we've had the project, the antimony price has doubled. And gold hit an all-time record Aussie high a couple of days ago. So we've got a record antimony price, and we've got a record gold price, and we've got a gold and antimony operation.
Okay, so they've spent $150 million today. Tell me about the plant. Actually, is that complete? Are you going to need to raise money to?
Yeah, the plant operated in 2023.
Okay.
Our predecessors, as a sort of last gasp before they went into administration, tried to start the operation very early by treating low-grade stockpiles. So they did put 100,000 tonnes through the plant in 2023. So it is a fully operational plant. It's in very, very good condition. We actually will double the throughput through that plant. That's something that was going to be done anyway. All it requires is a secondary crusher and a larger thickener and a few different pumps. It's not a big job. It's about a $15 million exercise to take it up to a 500,000 tonne per annum plant. Most of the equipment to do that is actually already been purchased, but it was not by us. It's on site. It's sitting there in plastic bags, brand new, but it just hadn't been installed.
Which you now own?
Which we now own, correct.
Okay, right. Can we just quickly talk about a brief segue? The antimony market. Can you tell us a little bit about that? It's a fairly esoteric semi-metal for most people. What's it used for, etc.?
Yeah,
and the size of the market as well, if you don't mind.
Most people have no idea, and a lot of people can't even pronounce it. But it's been a very solid growth market. It's relatively small. It's about 160,000 tonnes per annum. It's always been used as a fire retardant and a hardener, particularly in metals and particularly in lead. in lead-acid batteries, for instance, and things like that. Big use was as fire retardants. And the growth that's been driven at the moment is predominantly due to its increase in the use in solar panels. It has become a critical ingredient within solar panels as a hardener for the glass, so the glass becomes lighter, thinner, stronger, and also because of the properties of it, lets the UV rays in that you want and stops the ones that you don't want, so it becomes more efficient. So huge demand for that. Also, some of the antimony operations around the world are getting quite old and are not producing as much antimony. Strangely enough, with most of these deposits around the world, they're very, very similar. The deeper you go from high-grade antimony to very high-grade gold. So these mines are still very profitable. They're just producing gold, not antimony. But that means that the antimony market is short. China's stopped exporting antimony now to the rest of the world. They're using it all internally. So there's a very strong growth market. It's about 20% year on year in the antimony side. It's looking very, very robust, and that's where you're seeing that price increase. It's been significant, and the forecast is that it's going to stay up around those levels.
Okay, so you've got it's a small market, but declining, and therefore demand is up and price rising, which is all good. But it also should suggest then that perhaps not a lot of people around who have extracted antimony. So in terms of the metallurgy component, what do you know?
Yeah, that's very true. I mean, there's only a couple of operations in Australia, and by the way, this is Australia's largest antimony resource, and it's the 8th largest in the world. So it's a significant ore body in its own right. Costerfield produces antimony in Australia. They're nearing the end of their life. They've been mining there for more than 20 years, I believe now. And the other one is Fosterville, which does produce some antimony as well, but is renowned as one of the highest grade gold mines in the world. But it's very typical of these sorts of ore bodies. You have high grade antimony closer to the surface, about 200 metres down. You get a gold antimony mix, which is where most of our current resources sit. Below that, you get into some pretty spectacular gold zones, as Fosterville demonstrated, and were the highest margin, highest gold, everything, ticked every box for everything. You're seeing a very similar thing now with Southern Cross Gold. If you follow that, they've had some wonderful success in Victoria, very similar sort of ore body to us. At depth, you get into some pretty spectacular gold. And we've recently put out results from some of our deeper drilling, and that's some of the deepest drilling in the field, and 30 metres at 2 ounces with some 500 gram hits and 200 gram hits. So we're pretty confident that when we get through the antimony zone, we're going to see some pretty interesting gold values come up. Having said that, we've got 10, 15 years worth of antimony sitting there at the moment quite easily, but the potential to go deeper than that zone, which has always been the focus, mind you, and not the gold. It's always been the antimony that's been the focus, and get into those deeper gold zones. So the upside potential in the future is really quite interesting.
Was there any work done after the collapse to try and understand why that happened, and and what do you know?
From our predecessors, I mean, their issue was with another project in another state.
Okay.
It was totally unrelated to this. So they were putting Hillgrove back into production. They had a 3-year plan to do that. They just employed the senior staff to put the project back into production when they had a collapse at an operation in Queensland, a long way away, and totally unrelated. And that put them in extreme cash flow trouble. And this operation became a victim of that. It went into administration. It was a very long and drawn-out process to get it out of administration, which was one of the hardest things I've ever done. We thought it was going to take a few months, and it took about 9. But we thought that the reward was worth it. I do have some history with the project back in the day, so I had a bit of a feel for what the potential of it was, and it's the right size project for our company. Our company's only been in existence for 2.5 years. It was always going to be something that we could easily start up, and the startup capital costs, as you'll see in the pre-feasibility, are circa 70 million Oz. That's something manageable for a company like us. We're not going into a $300 or $400 million raising where you're beholden to the banks, and that can sometimes end quite badly. And the other thing is the grade, 6 grams equivalent, and remembering that the gold equivalent calculation, it's a bit convoluted, but it actually includes recoveries. So when you talk about 6 grams gold equivalent, that's building in that you're only going to get 90% recovery. So, the 6 grams is, you just got to be aware that that's 6 grams after you've taken the metallurgy recovery out. So that's, that makes it quite nicer. So you've got a high-grade project with commodities that people want, and I think everybody's probably pretty bullish on gold, and the curve's been what it has been for 10 years, and antimony is looking really quite special for at least the next 10 years.
Right, okay, so it's funny, when people talk about, multi-asset de-risking and multi-jurisdictional de-risking, sometimes if your structure's not quite right, everything goes down. Remember to silo. That's what we say. Right, and with regards to you've raised money obviously this year, and that's had an effect on what you're planning, presumably, and the speed at which you're planning it. So PFS comes out now. You're rushing through to some kind of bankable study quite quickly as well.
Yeah, we're not rushing, but we'll just get there very quickly. Our feasibility is just out. That took us realistically about 4 months. It took us 2 months to work out how we wanted to go, and then 4 months to put that together. But because of the unique opportunity that we've got an existing plant, we're on mains power, we're on a bitumen road from site. The project is run, so it's permitted. We've got underground development already in place. We're 23 kilometres out of a major regional centre with 30,000 people in it that has some of the best private schools and its own university, airports and everything else that you want. So we don't have a camp. We won't be a FIFO operation. Compared to what a lot of people have to do for a definitive feasibility study, we don't have to actually do any of those things. So we've got more metallurgical test work to do. We want to tweak that, and we see, we're trying to get a few percent more out of the plant by regrinding some of the ore to a finer grind size. Nothing significant, but just trying to tweak that to get an extra sweetener out of it. But we don't have a lot of work to do. So for us to go to the next step is actually relatively simple, and that's reflected in the price. It's about 75 million Aussie, and 30 plus million of that is underground pre-development to build up stockpiles. So largely de-risked. You look at the risk profiles that people have to do, it's largely already done for us. And commodity price is always a risk. But as I say, gold, it's been heading one way for 10 years, and antimony's going the same way.
Okay, and talk to me, so I'm sticking with the financial, if you don't mind. Talk to me about the relationship with Wogan and Excelsior.
Wogan are coming in as a pre-offtake on the antimony side. They're specialist off LME metal traders. That transaction is taking a little bit longer than what we'd hoped, but this seems to be something with off-takers, I'm finding. So they'll be doing the antimony. We've got very, very big interest on the gold side as well. And it actually became a lot simpler for us to separate the two. Some of the specialist gold traders can't even pronounce the word antimony, so that confused the conversation. And when we separated the two, the difference was quite amazing. So there's been a very aggressive and interesting group of people, all the names of which you'd know, who are leading the charge to get the gold off take. So that will help us, and that'll put more money into the bank. Where we sit at the moment, we've just done a $6 million raise. That will certainly get us to the end of the definitive feasibility study, but we also want to run a very aggressive exploration program that we actually don't see stopping. And that will start very, very shortly. The rigs are sitting there waiting. Everybody's waiting. We're just waiting on the final government sign-off on environmental permitting, so that, within days we'll be on the ground drilling with an RC rig initially at one of the areas, and then a diamond rig, and then a second diamond rig will come in. And those diamond rigs, we don't see an end to that program.
And talk to me why you think that's important, because obviously you kind of got a twin track of expenditure here, drilling, which is costs money, and having to kind of get through to the bankable and work out how you fund this thing in terms of where's the debt coming from, how much are you going to raise on the equity side of things. For you, is the size of the project more important for the valuation, which you want to obviously drive? 1.4 million or 1.5 million ounces with high grade is good, but it doesn't make it world class. So what's the game going forward for you, do you think?
If we look at the metrics of our peers, and maybe peers is the wrong word, but if we look at the metrics of people with similar ore bodies, there's Mandalay at Costerfield. Now that's nearing the end of its life, but it's been a very good producer. Fosterville, very similar ore body, and it's been an exceptional producer. Southern Cross Gold, their market cap is $500 million. They've raised 150 million Oz to explore, and their exploration target of, I hope I'm right, about 4 million tonnes at 7 grams is our current resource. So they're trying to find what we've already got, and they have a market cap of $500 million, and we have that plus a plant and everything else. So like every other managing director on the face of the planet, we think we're undervalued. Surprise, surprise. And there's lots of reasons for that, because it was tied up in an administration, so that always looks a bit untidy, and if people don't really understand the story. And we've had a lot of brokers and people to site of late, and they're all surprised that, oh wow, it's all here, we didn't understand. And that's why the share price has moved up quite nicely since we acquired the asset. So if you look at the metrics of that, we do think we are undervalued. The best way to do that is to demonstrate the upside potential of the project, and the best way to do that is to have an aggressive drill program. We started that very early on, and we hit those sort of intersections of 200 grams and 30 meters at 2 ounces and things like that. Our share price doubled in a day, and we traded 40 million shares. So it's very important to keep that up and show people that this is a bigger field. We've just released an exploration target of 1 million ounces. Which is mineralisation sitting directly below the current ore zones, which I can call them now because the feasibility document's out. So that sits directly down, and none of that mineralisation is extended deeper than the current areas of mining. So we don't think that we're carrying on too far with that. We know that these ore bodies do extend to depths of over 1 kilometre, but we haven't got anywhere near that sort of depth in extending our ore zones. So we think there's a lot of upside there, and we need to show it. But we've only been doing this realistically for 6 months, so the story is only getting out there now, and this conversation with yourself is part of that job.
Right, and talk to me about moving forward, right? Because we've come from sort of 3 years where no one was really rushing to start a capital expenditure program to build anything, because inflation, all the stuff that we know for the last 3 years. You are, I say, moving at a pace, moving at a lick and you picked it all up cheap. I get it all. But where does that kind of put the current funding market, right? Because the funders were not in any rush either, because the margins were crushed a bit. So maybe start with, in terms of the PFS, what do you know around the economics, and why is that appealing? to potential funders on the debt and equity side?
Well, the life of mine on our conservative numbers, and the modelling has been very conservative. It's sort of 30% discount to current spot, and the payback is 2 years. If you run everything at spot, it's a 1 year payback with a spectacular IRR of 800 million. So it at spot it does quite amazing things. We're not running our numbers at that. But that certainly makes you want to get it there a little bit quicker to get access to that sort of pricing. Again, the unique thing here is that the money required to get it in. And if we go back to looking at our peers, to do their exploration, they have raised double what we need to get into production. So one mechanism is just to do it equity at the right price. But you're talking antimony is a critical metal, so it falls into various states agreements and federal agreements. There's numerous funding mechanisms available there because certainly the New South Wales government and the federal government both have a very strong critical minerals, metals production push. So, we tick all of those boxes as well. Because it's in Australia, you've got conventional banking debt, which you don't have, and I've been offshore for many, many years, so I've never had access to that sort of money. Then you've got the usual bigger players. So, there's quite a unique mix available to us depending on what happens and where we are at the time, which is another reason to really push that exploration, because some really good exploration results can directly relate to how you fund the project.
Absolutely. And I guess this project would stack up even without the antimony. Well, I presume it would at these gold prices, but not that that's going to happen. Let's go to the exploration component. You talk about an RC coming in, then a diamond, and then potentially another diamond here. I'm trying to get to what your business model is, right? Do you think you get this thing up and running and you run it as some sort of annuity stream of cash, or are you looking to flip this thing out in terms of, because you obviously started this thing as what, explorers, because you got other projects, and so where does this go?
Oh, we're explorers. I mean, the history of the senior people in the company in my history is a project developer / operator.
Right.
So I'm more than comfortable to run a project, and if it's making good money, why not? Exploration is a very, very tough game at the moment. And there's very little funding available for it. And that in itself will provide incredible opportunities for those of us that will be in production and have a cash flow. And you're going to see more and more of that. And of course, we are at the smaller end of the market. It does give us some unique opportunities that the bigger players don't see fits into their range anymore. And if you look at, the Australian mid-tiers now, their history is that they all started with quite small projects at the right time and worked their way up. And this is an excellent project to be able to do that. And most of those companies started on projects that have been operated by others, and they acquired at the right price and could get them in. And if you're producing cash in a market where everybody else is having difficulties, unique opportunities to expand come along. Having said that, we see this as, a 10+ year operation very, very easily. And where we sit at the moment, we're looking at 3 million ounces easily within the field. There's already been 800,000 ounces taken out of the field. It's got a long way to go, and the depth potential on the gold has not been touched in any way, shape or form. So, where this is going to end, who knows? If we found another Fosterville, would I be unhappy with that? Probably not. And, we've replicated some of their best results. So it's not impossible.
It's not impossible. It just needs to be done.
That's true.
That's the opportunity.
The drill rigs, go hard on the drill rigs, go hard, go deep.
Okay, good advice for life. Let's talk about, and this is really a sort of session, a download session from you to me, because I've not heard the story before. Is you've got other projects in the portfolio, I guess they're taking a back seat. Do they have some value that you should be credited with?
Oh, absolutely. We listed on those assets and arguably we had a higher share price when we did that. We've got 1,000 square kilometres of ground directly east of Mount Isa that's prospective for copper and gold. Our exploration teams will be, as soon as we fire up these rigs, they're going up there to start drilling at Mount Isa. That's a unique part of the world. You're seeing a lot of funding for advanced projects in that area coming out of places like Glencore because they want to keep feed into their smelter in Mount Isa. So it's an excellent part of the world to operate in, and 1,000 square k's is a big patch of land. That's that's a 4-hour drive from one end to the other. So it's a big patch of land. We've got 650 square kilometres of ground east of Norseman. It's prospective for more things than I've ever worked on in one project. We went there for nickel potential within the Jimbalana dike, which is no nickel producer. It's also had some pretty special platinum group element hits by a project just off the side of our tenement. You're just south of the Nova nickel operation. We are literally across the road from Liontown's Baldania lithium project, and always potential for gold in that area. We're surrounded by gold mines, and we have, more by coincidence than skill, I must admit, unfortunately, drilled some of Australia's best rare earth results in clay minerals. So we're a sort of percent range, not part per million range. So that's one that's plodding along. We're doing metallurgy on that as we go along. There's not a lot of interest in rare earths at the moment, but I've got no doubt that will change again as the cycle runs through it. So that's a very interesting bit of ground, and we've got an advanced gold project in New Zealand as well that we were drilling last year. There's a very large area of low-grade mineralisation, sort of kilometre by kilometre and 150 metres deep at sort of 0.2 type grades. That's not economic in its own right, but where did that gold come from? That's our question, and we're trying to find the deeper sources to it. That it's a classic epithermal system. We've got the complete system. It's pretty obviously there's a porphyry copper sitting way down. So somewhere in there should be high-grade feeders. So that's a very interesting project as well.
Okay, so you've got those 3 projects and lots of different metals that you could be chasing after. Sometimes view those as a slight distraction in terms of time, slight distraction in terms of money. Do you view them or any one of those as a means to solving any kind of equity demands that you can have on the main project?
It's a double-edged sword, that conversation, isn't it? You just gold focused or nothing else. We had some very interesting fundraising and offtake that put significant money into the company on the lithium side. That allowed us to do some of the copper exploration that helped us leverage into a Gold-Antimony project. So, it's an interesting question, isn't it? Do you just do one thing only and that's your focus? Or do you keep a couple of things on? The market in exploration, as we all know, is rather fickle. And you can have a huge win by being one only. But, when you start out, we were certainly playing the field a bit, let's face it. And Hillgrove is definitely our focus now. But you can't go past Mount Isa as a it's one of the world's great mineral exploration areas, and to have 1,000 kilometres of it 20 minutes out of town, and on that area that was mainly operated by the majors for many years and didn't do much on it. It's got like less than 20 drill holes on it when we got it over 1,000 square kilometres. So it reminds me, in the story that I tell a bit, it reminds me of getting to Kalgoorlie in the very early 80s, where there was old workings all over the place and not a single drill hole. And that's where the sort of open cut mining and Kalgoorlie reinvigoration took off. This area reminds me exactly the same. There's lines of old workings all over the place. There's green rocks all over the place, and there's natural.
Right. Okay. Well, I guess we'll hear more about that as you make decisions on what to do there. Look, Ron, I appreciate that running through the Hillgrove opportunity and interesting to sort of see the pace at which you're going through the phases. That's really good. Look, stay in touch. Let us know how you get on. I'll be keen to see where you end up.
Wonderful. Thanks, Matthew. Appreciate the time.